what do you make then about the concerns from some that this is a Federal Reserve that's going to be hiking ultimately into a recessionary environment?
Well, that's the tough trade-off between growth and inflation in this world that is shaped by supply that have yet to be acknowledged by the Fed or the ECB for that matter. So if you look at the Fed's forecast as well as the ECB forecast, they don't seem to acknowledge that the very aggressive rate hikes that they're putting forward could have significant impact on growth. And the moment that, for as long as they don't acknowledge that, we do not want to chase any bear market rebound because any incoming data volatility could quickly kind of pivot central bank pricing to be more focused on the politics of inflation, which is ever tightening policy and rate hike signals.
There's nothing about the global equity rebound that we've seen in the last month that will convince you and the team at BlackRock to change that view?
If you look at the forecast of the Fed, they are essentially expecting inflation to come down by itself. And we believe that actually in order for them to bring down inflation, they have to slam down kind of spending and the demand side of things significantly. That's in the case of the Fed. And if you look at the forecast of the ECB, they are actually not expecting a recession, and we are, right? So it really feels that they are hoping and expecting a soft landing when in reality, given the very, very tough environment that we're in right now that is very much characterized by supply constraint, we're not going to have both. It's you have to choose between growth and inflation, and the trade-off is so much tougher in this environment. And it doesn't feel to me that central banks are acknowledging that at this moment as they continue to focus on the politics of inflation rather than the economics of inflation.